In this video, I'm going to tell you how I would diversify 3 different investment portfolios. A portfolio of only 1,000 euros, how would I diversify it? How would I do it with a portfolio of 10,000 euros and a larger portfolio of 100,000 euros? On which crowdlending platforms would I invest? Stay until the end of the video to learn about these 3 different diversification strategies. Before we begin, I'd like to invite you to our Telegram community where you can share experiences and opinions with other investors and also subscribe to the channel so you don't miss more interesting investment videos. Now let's get to it. We'll start by looking at how to diversify a 1,000 euro portfolio, the smallest of all. This is usually a portfolio of someone who starts investing in crowdlending. And that's why we won't stop diversifying just because it's a small amount, but we'll choose platforms that are very easy for beginners to use, that allow us to diversify even with such a small investment. And some of them also allow us to invest in other types of assets. Like, for example, the first platform I'm going to suggest here is Mintos. Mintos is without a doubt the largest platform in the European Union for investing in P2P lending. And here we will not only find crowdlending investments, but we can also find investment opportunities in bonds and real estate investments. We can also invest in stocks, ETFs with a kind of robo-advisor, and we'll even be able to let our money earn interest as if it were a high-yield savings account. But here what we're going to deal with right now is investing an amount from this 1,000 euro portfolio in Mintos, and what I would do is diversify 25% of the portfolio. I would invest 250 euros in Mintos in one of the predefined portfolios, either the core loans or the custom loans. With core loans, we can simply decide the amount we want to invest, enter the amount, and it will be investing that amount. We won't have to do absolutely anything, and we can withdraw the money at any time. This might take a few days for you to receive, since if there are delayed loans, you'd have to wait until the delay is resolved or until a buyback guarantee is executed. And that also depends on supply and demand, but usually when we want to have our money available, we will have it available on that same day or the next day. And if we want to further customize our portfolio, we can choose custom loans where we can decide in what type of loans and what type of loan originators we want to invest. It may also be a very good option to start first with core loans, and as we become familiar with this type of investment, choose our own auto investment strategy. One thing we should know about Mintos is that it does charge a small fee for investing in this type of portfolio. There is no charge if we invest manually, but there is if we invest automatically. Even so, it is a very small fee, which is 0.39% annually if we invest in core loans, and if we invest in the more personalized strategy, 0.29% annually, which is a very small fee that, despite it, could make it worthwhile to invest. And something we must also keep in mind is that Mintos is a regulated platform, and within Mintos, when we are investing, we will be diversifying across different originators. But this doesn't mean that ideally one should only invest in Mintos. For me, it's also important to invest in other platforms and diversify at the platform level. That's why I would suggest investing another 25% in another platform that is also very easy to use, even easier than Mintos. It could be Bondora, or if some prefer, Monefit. Bondora is a much older platform that has been on the market much longer than Monefit. That's why for me it's my favorite as a simple to use platform where we can withdraw our money at any time. Here the return we are going to get is a lower return of 6%. And they don't charge a commission for investing, but they will charge us a €1 fee every time we withdraw money. This is a flat fee, so it's not convenient for us if we're going to be withdrawing money very frequently. But if what we want is for our money to keep growing and to have it available at some point, it's interesting as long as we're going to withdraw amounts occasionally. And here at Bondora, once registered, all we have to do is deposit money and it will be automatically invested and we will receive the interest daily. This is very interesting because it generates compound interest for us every day. The other alternative is Monefit. It has been in the market for less time. However, it offers us a return of slightly more than 7%. 7% when we invest without a term, since Monefit does offer us investments with a slightly higher return, but at a fixed term. Monefit is also very easy to use, and as you have seen so far, we have invested 25% in Mintos, 25% in Bondora, and let's see where we will allocate the remaining 50%. I will also choose 25 and 25%, so I diversify a bit more. The next 25% I will also allocate to personal loans and invest in Via Invest. Via Invest is a platform that is also regulated. It's a platform that, in terms of appearance, is quite ugly, quite boring. It doesn't give much to talk about, but it offers us a good return and has never failed in all the years it has been operating in the market, and that gives us a vote of confidence. What's more, it's a platform that's also regulated. Here you'll find loans usually with a 6-month term, some for 3 months, and they'll typically offer us a return ranging from 11 to 13%. Right now, we are going to be able to see higher returns of 11-12%. And in VI Invest, although we can diversify, the diversification is a bit less than what we can have in Mintos, since here we are investing in originators only from the same group of companies to which the platform belongs. And I would like to propose another alternative for this 25% if you prefer a slightly better technological platform, or at least with a slightly more visual appearance, and if you don't mind investing for the longer term, which is Nectaro. Nectaro is also a platform that is regulated and will also offer us the possibility to invest in loans from its own loan originator. However, the profitability they offer us is usually a bit higher, around 12 to 13%. However, we have to keep in mind that here the timelines usually go to 1 or 2 years. And for the remaining 25%, I would choose Debitum. Debitum is a regulated platform, but we are no longer investing in personal loans here. We will be investing in loans to companies, and this way we can diversify our portfolio with 75% in personal loans and 25% in business loans. Debitum is a platform that is regulated and also has an auto investment strategy. Here we will be able to invest in different loan originators, but of course we will see far fewer loans than we saw in Mintos, as we are talking about business loans. And perhaps you might be surprised not to see any real estate investment platform here, but for such a small portfolio of 1,000 euros, investing in real estate would usually require a larger amount. Normally, we're talking about real estate investment platforms requiring us to invest at least 100 euros, but in most cases, we'll need to invest 500 euros, which would allow us to diversify much less. That's why I wouldn't include a real estate platform in an investment portfolio of just 1,000 euros. In addition to the fact that most of them do not pay us interest on a monthly basis, which also means we cannot benefit from compound interest by reinvesting investments and interest every day or every month, as the platforms I have proposed were offering us. So here is how the 1,000 euro portfolio would look like. I would invest 25% in Mintos, another 25% in Bondora, 25% in VI Invest, and 25% in Debitum. Now, if you want to start investing in any of these platforms besides the returns they already offer us, they usually offer a welcome bonus for new investors. If you sign up through the links that I leave below in the description, you can also find out what the welcome bonus they are offering us right now is and take advantage of it. And now let's move on to the 10,000 euro portfolio. In the 10,000 euro portfolio, a different strategy would be followed here. Here we already have a higher amount, and here we are interested in diversifying more and diversifying with a criterion that is very important to me. For my portfolio of 10,000 euros or more, I would choose to diversify and not invest more than 10% in each of the platforms I'm investing in. Why this 10%? Because on average, what we can typically obtain by investing in crowdlending is 10%. Imagine that a platform does poorly and I lose money from a platform. If I were to lose that 10%, I would only be losing the profitability of 1 year. That's why, for me, this is a good criterion to follow when it comes to diversifying when we are talking about a portfolio of 10,000 euros or more. And here, what I would do is add to these 4 platforms that I already had in my portfolio of 1,000 euros, I will add other platforms. I'm going to add Peerberry, which is a personal loan platform, although it also has some real estate loans, and it's a platform with an impeccable history and the trust of many investors. The difficulty of Peerberry and why I haven't added it in the previous portfolio, it's because there tends to be cash drag, meaning our money remains uninvested since there is high demand from investors, and also because the returns are slightly lower. But I'm interested because of the security, the confidence that this platform brings to my portfolio. So I would add Peerberry and invest 10%, that is 1,000 euros. And I would include another personal loan platform where I can diversify a lot, which is a marketplace. I would add Income Marketplace. Here we have different loan originators and we can obtain a higher return, which is around 12%. There are even some loans over 12 at 13%, and we can find different loan originators with various terms, which is also ideal if we want to invest in the short term. Regarding the business section, we have Debitum, and I would also add Afranga. Although here we are investing in business loans, we are actually investing in loans to loan originators, which depends on how we want to categorize it. In theory, we fund the company that originates loans, but this money is used to fund personal loans and other types of loans. Afranga is also a platform that is regulated. It is regulated as a crowdfunding platform at a European level, and it is offering us different returns depending on the loan originator in which we are investing. Some of the loan originators belong to the same group as the platform, but others are completely external originators. One thing to keep in mind here is that Afranga currently does not have an auto investment strategy, although they do plan to implement it in the future, so looking forward to when we'll be able to configure our auto investment strategy. In my portfolio of 10,000 euros, I would include other sectors. I would include the agricultural sector, and for the agricultural sector, I would choose Lande. Lande is a platform that has been in the market for a while and offers us the possibility to finance loans for farmers. These loans are granted in different countries, many of which are in the Baltic region, but it has also incorporated other markets such as Romania and Poland. Here, all loans have collateral, a guarantee behind them, and we will be receiving interest depending on the type of loan, either at the end of the loan or in installments. We will have different options, and we can also set up an auto-invest strategy that also has a secondary market if we want to exit our investments and sell them early. Lande is also a platform that is regulated at the European level as a crowdfunding company. And here in the 10,000 euros portfolio, I would choose real estate platforms. I would choose two platforms. I would choose Domoblock because it is a Spanish platform that offers me a different type of investment. Here, what we are going to invest in is real estate investment, but in house flipping projects. And it is something that we do not see on any other platform, and we are going to be able to obtain quite a high return, additionally investing in the short term, which is not very common in real estate investment. An alternative option to Domoblock would be to invest in Indemo, which is also a different investment. Very different because here we are going to invest for a longer term. We don't know the time frame in which our investments will be returned to us, but it has a very high potential yield since we are investing in discounted debt. Therefore, we will be able to achieve estimated returns of 15%. And we will also be investing in the Spanish real estate market. Another real estate platform I would choose is Crowdpair. Crowdpair is from the same team as Peerberry, which, as I was saying, is a platform that has a very good track record. In Crowdpair, what we are going to invest in are real estate projects in the Baltic countries. So in this way, we would have our real estate part diversified with investments in Spain and with investments in the Baltic country. Additionally, the advantage of Crowdpair is that it usually pays us for most of the projects, not all, but the majority of projects tend to pay interest on a quarterly basis, and we can invest from as little as 100 euros. And that's how my investment portfolio of 10,000 euros would look like. I would invest 10% in each of these platforms, so I would invest 1,000 euros in each of them. I would invest 10% in Mintos, 10% in Via Invest, 10% in Bondora, Peerberry, and Income. Then I would invest in companies with 10% in Debitum, 10% in Afranga, and in agricultural loans, another 10% in Lande. In real estate investment, I would invest 10% in Domoblock and 10% in Crowdpair. And for larger portfolios, let's see how I would invest 100,000 euros or more. Here, I would apply a slightly different criterion. I would still not invest more than 10% in every single one of the platforms to maintain this criterion of not investing more than 10%, which is what I can earn in a year. And here I would invest in all the previous platforms, but instead of investing 10%, I'd invest 8% in each of them. And I would allocate the rest, 20% to slightly riskier investments, to slightly different investments, to new platforms offering me something very specific right now, and with which I can obtain a higher return. So I would be taking on a greater risk in that 20%, and this portfolio also allows me to invest in platforms where the minimum investment amount is higher. For example, platforms where we have to invest a minimum of 500 or 1,000 euros. Here, for example, I would include platforms like Ventus. Ventus is a platform in which we are investing in the energy sector, but the minimum we can invest is 1,000 euros. It offers us a very high return of over 15%, and for me, this platform makes sense when our portfolio is larger because we will be able to diversify and invest a minimum of 1,000 euros per project in each of the projects they have. And I would also incorporate Devon. Devon also offers us high returns and is a real estate investment, something that, until now, my portfolio, as I was explaining to you, had few real estate investment platforms, so I would include this one that also offers me high returns, around 14–15%. It could also include Astera, which is also a real estate investment platform in the Baltic, but this is a platform or real estate project that is a bit different because here we are investing in the same real estate project also, as I mentioned, in the Baltic. These three platforms, Ventus, Devon, and Astera, being new platforms, are currently offering us high profitability and many bonus and cashback campaigns. The three work similarly as their underlying technology is alike. They are completely independent platforms. The only thing they share is the technology and how we will invest. We'll have to invest at least 1,000 euros per project and we'll be able to receive daily interest, or we can automatically reinvest them and generate compound interest. And all of them offer an early exit option, allowing us to withdraw our investment prematurely after the initial 6 months, should we desire. On these platforms, I would also invest 8%. I would invest 8% in Ventus as it allows me to diversify. I would invest 8% in Devon or 8% in Astera, or here I could also choose to diversify between the two, investing 4% in Devon and 4% in Astera. So up to this point on all these platforms, I would invest 8%, which in a portfolio of 100,000 euros would be 8,000 euros. The remaining 4% I have available, I would allocate to 4 different platforms, investing 1% in each. Why? To test new platforms that interest me or invest in riskier platforms that could bring a good return to my portfolio. For example, I could invest 1% in Loange, which is offering me returns that sometimes go up to 15%, but usually are around 13%. I could also invest another 1%, which is 1,000 euros, in Hive 5, which is another platform that is also relatively new to the market and offers me a high return of around 13% or a little more. I could even try platforms like Maclair or 8lens, which offer me a very high return with business projects, but with a very high risk profile, not only because the platform is relatively new, but also because of the types of loans we are financing. I would invest another 1% in a very new platform on the market called FF Forest, where we can invest in forests, making it a different investment. And since it's a new platform, it's offering us returns of more than 18%. So this is how my investment portfolio of more than 100,000 euros would look. I would invest 8% in each of the platforms I previously had in other portfolios. I would add Ventus with another 8%, and with another 8%, a real estate investment platform. I would choose Devon or Astera. I would then allocate 4% that remains and invest 1% in 4 different platforms. In this case, I would choose Loange, Hive 5, Maclair, and FF Forest. But for me, this part would be very variable, and I would add and remove different platforms as new ones emerge or new promotions come up, and I would play a bit with this percentage, albeit a very small one in this part. So in summary, if I had a portfolio of 1,000 euros, I would invest in very simple platforms and I wouldn't stop diversifying. Thus, I would choose platforms that already allow me to diversify greatly within them. In a portfolio of 10,000 euros, I would follow my criteria of not investing more than 10%, since 10% is the average return we usually get in crowdlending investments. So if there were a problem with any platform, I would only lose the profitability of 1 year. With a portfolio of 100,000 euros or more, I would take a bit more risk in part of my portfolio. In 20% of my portfolio, I would include newer platforms and investments that are riskier. Now, if you want to start investing in any of these platforms, in addition to the returns they already offer us, they usually offer a welcome bonus for new investors. If you register using the links I put below in the description, there you can also find out what welcome bonus is being offered to us right now and take advantage of it. Now that you know these 3 different diversification strategies, tell me how you diversify. Leave it in the comments below, and also if you have any doubts or questions, you know that I answer all your comments. Before you go, I'd like to ask you for a like, a thumbs up, which makes me happy and helps the channel grow. I'd also like to invite you to subscribe to the Telegram channel where you can share experiences and opinions with other investors, and to subscribe to this channel so you don't miss more interesting videos about investments. See you very soon.